a stock means you own a real slice of the company, not just a ticker. Common stock gives voting power and possible dividends. It's the classic choice for investors. Preferred stock skips voting rights, but pays more stable dividends that many people enjoy. Your portfolio is simply every investment you hold, like your personal money toolbox. A public company lets anyone buy shares, turning everyday people into tiny co-owners. Market indexes show how sections of the market perform, like S&P 500 or NASDAQ. These indexes create a benchmark, helping you compare your portfolio against the market. Understanding these basics makes every other stock term easier. Seriously, it's a lifesaver. Stock exchanges connect buyers and sellers, creating a huge marketplace where companies trade their shares. Brokerage platforms give you access to the market, basically your digital bridge to every stock. Every stock carries a ticker symbol, a short code like Apple or Tesla. Opening and closing prices show where the market starts and ends during the regular session. Pre-market and after-hours trading lets prices move even when most people think markets are closed. These extended hours often react to news first, giving early clues about market direction. When big events hit, after-hours trading can explode in volume, sometimes calmer, sometimes crazier. Understanding how these trading windows work helps you read price action way more confidently. Stock exchanges look chaotic, but here's the twist. Every move follows patterns you can actually predict. Ever wonder why markets react instantly? Because exchanges match millions of orders faster than you blink. Your brokerage isn't just an app. It's the gatekeeper deciding how fast your trades execute. Ticker symbols look simple, but they hide entire stories, and some move crazier than others. Opening prices reveal overnight pressure, while closing prices expose who actually control the day's momentum. Pre-market moves often answer the big question: what's the market scared of today? After-hours trading is where surprises explode. Earnings, bad news, and reactions nobody sees coming. Master these trading windows, and you'll read price action clearer than most beginners even dream of. Market cap looks simple, but here's the twist. It shows what the entire market thinks instantly. Ever wondered why two similar companies have different values? Their share counts quietly change everything. Enterprise value goes deeper. It asks the real question: how much is this business actually worth? Revenue tells you what a company brings in, but net income reveals the truth people usually ignore. Here's the fun part. A company can grow revenue fast while profits quietly go missing. Assets show what a company owns, but liabilities whisper the danger most beginners underestimate badly. The real challenge is balancing both, and smart investors judge companies by how tight that balance is. Master these fundamentals now, and the next financial terms will click faster than you expect. EPS looks tiny, but here's the trick. It tells you how profitable each share actually is. But EPS alone can fool beginners, because a company can boost it without real growth happening. That's why investors love the P ratio, a quick check on price versus real earnings. A low P can look cheap, but the twist is, sometimes it means trouble, not opportunity. PG ratio fixes that confusion. It asks a smarter question: is the growth worth this price? Dividend yield shows your cash return, but watch out. High yields often hide real risks. Free cash flow is king because it reveals money the company actually keeps, not just reports. Master these numbers now, and valuing companies becomes way easier than the internet makes it look. Growth stocks look exciting, but here's the twist. Fast growth rarely comes without real volatility. Value stocks seem boring at first, but secretly they're the ones patient investors often love most. Blue chip companies act like anchors, steady, reliable, and rarely doing anything too dramatic. Cyclical stocks ride economic waves, great in expansions, but brutally honest during downturns. Defensive stocks shine in chaos. They stay calm when markets panic, almost like financial comfort food. Market cap categories reveal size and risk. Large caps feel safer. Small caps can swing like crazy. Penny stocks look cheap. But the real question is, cheap entry or expensive regret later? Understand these stock types now, and you'll spot opportunities faster than most beginners even realize. Mutual funds look simple, but here's the twist. You're paying someone else to pick everything. ETFs change the game completely. One click, and you own dozens of companies instantly. Index funds ask the big question. Why beat the market when you can simply become it? Hedge funds sound mysterious. But honestly, many just take big risks hoping nobody notices the downside. Commodities move differently. Gold calms the market, while oil acts like caffeine on prices. Bonds feel slow, but here's the hook. In chaos, they become the market safety blanket. Currencies move nonstop. Every tiny shift tells a story about trust, fear, and global economic pressure. Crypto is a wild card, unpredictable, chaotic, but impossible to ignore if you understand risk. Volatility feels scary, but here's the twist. It's just the market showing its true heartbeat. Bull markets feel amazing, but be careful. Confidence grows fastest right before people get careless. Bear markets look brutal, but smart investors quietly accumulate while everyone else panics hard. Corrections aren't crashes. They're reality checks reminding people prices don't rise forever. A rally often appears when people doubt most. The market loves surprising its own audience. Market crashes feel sudden, but the truth is the warnings usually appear long before people notice. Bubbles grow from excitement, burst from denial, and repeat because humans never change. Market sentiment swings fast, so stay curious and follow the next video to get even sharper.